Hello, everyone. Thank you so much for joining. Good morning, good afternoon, and good evening. My name is Osam Razi, and I am part of the Financial Inclusion Program at Innovations for Poverty Action. And we're excited to have this first webinar of this research initiative by IPA on interoperable payment systems. Today, we'll take 60 minutes of your time approximately, which will include a brief overview of the project, a summary of the white paper that we recently published, a panel discussion by some great panelists that we have with us today, and then in the closing session, we'll talk about some next steps and priorities for this research initiative. I will now present my screen. There we go. And there we are. Okay, so again, thank you so much. And we're excited and we're grateful for all of you for joining. Today's webinar is on inclusive instant payment systems by Innovations for Poverty Action. For those who don't know about IPA, just a quick brief of IPA. IPA is a research and policy nonprofit that discovers and promotes effective solutions to global poverty problems. We create high quality evidence and share this evidence strategically to equip decision makers to use this evidence. We work in 21 countries throughout Africa, Asia, and Latin America, and we're HQ'd in Washington, D.C. in the United States. Our research on interoperable payment systems is a 4-year research agenda where we try to analyze the design aspects of interoperable payment systems, understand the quantitative impact these systems can have on an economy, and we try to aid the research process around interoperable payments. On the design aspects of interoperable payment systems, we are particularly focusing on the pricing of off-net P2P payments and the uptake of cross-network digital merchant payments, two elements which are considered impediments or at the same time catalysts that can drive usage of digital financial services. On quantifying the impacts of interoperability, we want to be able to essentially say that through the introduction of interoperability, X value was generated within an economy. And we will try to get to that number as we progress with our different research projects. And at the same time, whilst doing this research, we will keep evaluating the research approaches that we use to study payments interoperability so that we can get to some good research approaches that can be taken up by other academics. We are focusing on 5 different countries and therefore 5 different payment systems. The first is the Tanzania. In Tanzania, we're focusing on TIPS, the Tanzania Instant Payment System. In the Philippines, we're focusing on InstaPay. In Pakistan, we're focusing on RAS. In India, we're focusing on UPI, the Unified Payments Interface. And in Myanmar, we're focusing on WinePay. We have a great team of researchers that is leading this whole research initiative with 3 primary principal investigators, including Dr. Phil Russler, who's the associate professor at the Department of Government at William & Mary in the US, Dr. Russell Toth, who's a senior lecturer at the School of Economics at the University of Sydney, Dr. Tiffany Tsai, who's an assistant professor at the Department of Economics at the National University of Singapore. Then we have co-PIs who are supporting research projects in specific countries. Mark Walsh, who's a PhD candidate at Stanford, and Dr. Konstantin Manda, who's at the Economic and Social Research Foundation in Tanzania, are both supporting our work in Tanzania. And then we have Dr. Kashif Zahid Malik and Dr. Farah Saeed, who are both at Lahore University of Management Sciences, who are leading our research project in Pakistan. This research initiative is managed by myself, the Financial Inclusion Program at IPA, and supported by Rebecca Rouse, who's the director for the Financial Inclusion Program. So for today's webinar, Right after I stop talking, Dr. Russell Toth will give a presentation on the white paper titled Inclusive Instant Payment Systems, an Evidence-Based Approach from Design to Impact by IPA that we recently published. Then we'll jump into the panel discussion on interoperable payment systems in emerging markets. And for this panel discussion, we have, like I said, some great panelists. We have Monica Oyer from the International Finance Corporation, IFC, Dr. William Ayub Mongose at the Bank of Tanzania, Dr. Shintin Tiffany Sai at the National University of Singapore, and Steve Haley with the Moja Loop Foundation. Rebecca Rouse at IPA will be the moderator for this session, and she'll introduce the panelists in more detail once the panel discussion starts. And at the end, Dr. Phil Russler will talk about some next steps and priorities for this research agenda. While the panel discussion is going on, you will have a chance to ask questions in the Q&A box, and then Rebecca will be able to direct those questions at respective panelists. This will be at the during the end of the panel discussion. Okay, so I'll stop there and I'll pass it on to Russell. And yes, we hope that you all enjoy this webinar and you find this interesting. Russell, over to you. You want to take control? Yeah.
Great. Thank you, Hussam. Thanks, everyone. Great to see an audience for this. It's really exciting to be able to start sharing on this and expanding the dialogue around this project. So let me talk to you a bit about our white paper and maybe give some ideas about, what is interoperability, what are fast payments, why should we care? So actually, interoperability has been one of the core functions of financial systems basically throughout human history. So think about money itself. One of the main reasons that money emerged was to have a medium of exchange to overcome the double coincidence of wants problem in barter economies. So, if I, manage a herd of cows and you create roofs, and I want to trade a cow for a roof, the value of those might not exactly add up. And so we might not be able to trade easily in those kind of situations. So money emerged as a way to capture that gap in value and allow people to trade more easily. And basically, it made transactions interoperable. So having an interoperable medium of exchange massively expanded the scope of trade and hence the depth and efficiency of economic activity. It allows us to have, modern economies. And so cash really is the kind of original kind of modern interoperable payment instrument, and it became king in many economies, and it still is in many emerging markets. So why is that? Well, cash has a number of desirable properties. First, it's interoperable. It's universally accepted. We don't need to have trust between buyer and seller. Even if I don't know you, I'm willing to accept cash because I know I can trade it on for something else that I value. Cash transactions are instant or real time, and that's actually a really important property that I'll come back to in a second. Cash is irrevocable. So once someone makes a cash payment to someone else, it's kind of like a push payment. It's difficult to reverse. And so all of the fraud and other concerns that can come up when transactions are delayed, that's kind of eliminated. I give you the cash and it's done. Cash is really low cost to transact in. There's no direct transaction fee. And, it's pretty accessible. It doesn't, you don't really need to be a techie to understand how to use cash. So if we want to think about, payment systems, especially in emerging markets that can rival and replace cash for use cases like merchant payments, government payments, et cetera, and serve low-income users, we want to think about a lot of these properties. And so ironically, the modern financial systems in some ways have moved away from some of the desirable properties of money. So much of the modern banking system relies on a daily net settlement framework through overnight clearance to clear transactions. So that actually moves away from this, the fast clearance property of cash, and delays transactions, and that can cause a lot of issues. So in countries with, extensive financial infrastructure, strong rule of law, and rigorous individual identification, those delays in payment clearance can be managed to some extent. You can have controls for fraud, et cetera. And this, payment infrastructure has underpinned a massive expansion in electronic payments, including merchant payments in advanced economies since around the 1950s. However, in many emerging markets, as many on this webinar, I'm sure know, these bank-focused systems haven't done so well in driving financial inclusion. And part of the reason is that this delayed transaction clearance doesn't work so well for trustless payments like between merchants and consumers. Now, you might say that, we have mobile money systems and that allows very fast electronic payments, and that's true, but that really only works well within mobile money networks if the two people transacting both have accounts with the same mobile money provider. In many economies, if you're with different financial institutions, your transaction networks are actually quite fragmented, and it can be slow to send transactions. So mobile money systems tend to be dominated by person-to-person payments and remittance payments, and have been less successful in driving merchant payment adoption. So we're focusing on instant interoperable payment switches that are trying to address some of these challenges and are rolling out in a number of emerging markets. And Hussam mentioned some of the switches that we're specifically focusing on, although there's a number of others that we could look at and others that are coming online in the coming decade. In the white paper, we report on some data on these switches to show how successful they've been in some contexts. So here's some data from Brazil, India, the Philippines, and Mexico. The graph on the left is showing the growth of transactions per capita on an annual basis, and you can see that there's some impressive growth in some markets. And then on the right, we show the fraction of all electronic transactions that are being processed through these fast payment switches. And so you can see in the Philippines, for example, that more than 25% are going through a fast payment switch, and in India, over 75% of electronic payments have been going through the UPI. So these systems are becoming really important in some economies and are launching in others. And so we want to provide more analysis. So in this white paper, Inclusive Instant Payment Systems, an evidence-based approach from design to impact, we try to add to the global discourse around inclusive interoperable payment systems in emerging markets by bringing an applied economist toolkit to the analysis and evaluation of these systems. We use the term inclusive interoperable payment systems, IIPS, partly because that's really the standard term now in the broader community working on these systems. We see the inclusiveness as somewhat aspirational as researchers who want to evaluate. We're not necessarily saying ex ante that these systems are inclusive, but certainly the aspiration is to be inclusive and to be accessible to low-income users, even in remote areas. So in our white paper, we aim to complement a number of great reports that have taken more of a focus on the technological development, how to build these switches, some of the policy issues. There's also a nice academic literature review that's more focused on the deep economic theory behind these systems by Bianchi et al. And we do a few things in the white paper. We trace out a theory of change to try to capture the mechanisms we think might be relevant if we're going to see broader socioeconomic impacts from these systems. We provide kind of tentative preliminary thinking on what the existing theoretical and especially empirical literatures tell us about what we might expect. We highlight points of interface between academic research and policymaker priorities. So we really want to encourage a lot more research in this space, and beyond our own research, and try to help direct that research in a direction that's interesting for policymakers that are still puzzling through how to manage and roll out these systems. And we also provide structured content on measurement, empirical evaluation, and monitoring and evaluation of these systems. So hopefully there's a lot for anyone, depending on what your interests are. So I just want to expand on those points a little more in my last couple of minutes here. So we outline a theory of change in the white paper to think about how introducing a new open loop financial system could transform emerging economies. Of course, this is a huge and complex question. So to make it tractable, we focus on 4 phases and 4 constituents: financial service providers, merchants, households and consumers, and the government. The 4 phases we focus on are onboarding, so bringing FSPs onto the switch. That can already be transformational for some FSPs because it involves significant technology upgrading and digitization. Then we want to think through, broader user integration and adoption as consumers, merchants, government, and other organizations get onto the switch. So we talk through 3 kind of major use case areas. One is P2P, person-to-person payments. So thinking about how existing transfer and transaction mechanisms might be upgraded in the presence of a switch. You might reduce the need for people to hold accounts with multiple financial institutions and allow for faster payments. We think there could be, particular transformation in the merchant payment space as fast payment switches really allow consumers and merchants to transact trustlessly. So if many consumers and merchants don't know each other, and so if they're going to make a digital transaction, they want to know that transaction goes through right at the point of sale. And these fast payment switches allow that regardless of which FSP the consumer or the merchant is with. So we think that could be a really big impact. And then it could also be transformational for government payments. Again, that governments and citizens can be FSP agnostic as they transact, either as the government distributes, say cash payments or social protection payments, and as consumers and citizens make payments to the government. Then we think about broader behavioral and organizational changes that could happen as a result of the rollout of a fast payment switch, and then dynamic market changes. So we provide some tentative hypotheses across these. I want to highlight the market level impacts here. Some people hypothesize that a fast payment switch could lead to more competition in the financial sector. It might reduce the network incumbency advantage of large FSPs with large user networks. So now if there's a fast interoperable payment switch, it's not necessarily important that if you and I want to transact that we have accounts with the same financial service provider. So that could provide opportunities for Fintechs and other FSPs to gain market share. We might also see more innovation and maybe different investment patterns by FSPs. In the regulatory space, we highlight 4 key issues where we think that applied economic analysis can make a particular contribution. So first, the question of what to build and when. When should a country or a government or private sector association adopt a payment switch? And how does the nature of adoption vary depending on the maturity of the financial sector? Second question is, once you have a payment switch, how do you spur adoption? How do you get those network effects going where merchants and consumers are both digitizing their payments, moving away from cash? The third issue is pricing. How should a regulator control the pricing of off-net payments? Should they zero price them and see these fast payment switches as more of a public good, or should they leave it more to the free market to set those prices? And then we also provide a little discussion on setting up effective governance models that are inclusive and give voice to all parties. We also provide some direction on the measurement of interoperable payments. This is closely related to, a lot of existing work on the measurement of digital payments more generally, where we worry about just surveying people and asking them, because recall-based data could be noisy. So we think about different ways to get administrative data or otherwise get more objective data directly through users. And we also provide a model survey module in the appendix of the report that provides an example of questions that could be incorporated in many different surveys on how to measure interoperable off-net payments. Finally, we close the report with a chapter that provides a monitoring, evaluation, research, and learning strategy and kind of walks through the different steps in developing that strategy. So it's the start on a kind of monitoring, evaluation, research, and learning toolkit, and we advocate that all switch implementations should try to adopt at least this kind of strategy to measure and to evaluate and think about how to improve. Okay, so that's the report. We're really excited to release it, and I hope something in what I said caught your interest. The reports doesn't have to be read linearly, so feel free to pick and choose and jump to the parts that interest you, and I hope there'll be something of interest there for everyone on the call. So thanks very much, and I look forward to the panel discussion. So I'm glad to return it back to Rebecca. Thank you.
Well, thanks, Russell. Sorry, I was on mute. And I'm really excited to be joined by a really incredible panel here. There's a lot of content in the white paper, as anyone who's already downloaded it can tell, and as always, the devil's in the details. So we'll see how much we can cover in the conversation. So before I introduce our panelists, I just want to say in terms of structure, we're going to have a conversation for the first half of the panel, and then I want to open it up to the audience. So I would encourage folks to start putting questions in the Q&A box, and we'll address them at the second half of the panel. If you have any questions for Russell from his presentation, please also include them there, and we can address those during the discussion, so don't be shy. Anyway, thank you again to our panelists. I'm going to go through and introduce folks now. So we're joined by, out of order, I guess, of the photos, Steve Haley, who's the Director of Market Development and Partnerships at Mojaloop Foundation. He promotes interoperable real-time payments that reach everyone by helping various stakeholders to understand their role in building locally owned, locally controlled, and locally operated payments infrastructure. He's led a diverse set of impact-driven teams for 22 years in over 10 countries. I've worked in government, nonprofit, and private sectors, and he holds degrees in mathematics from West Point and the University of Padua. And folks, as I'm introducing you, if you want to turn your cameras on for the discussion, that would be great. Next, we're joined by Dr. William Ayub Mongose. He's the head of low-value payment systems and the director of national payment systems at the Bank of Tanzania. And that's one of the platforms that we're looking at as part of our work here, the rollout of TIPS, which I'm sure he'll be able to speak to. Prior to taking this role, Dr. Mongose worked at the Bank of Tanzania for over 10 years as a computer systems engineer in the Directorate of Management Information Systems. He holds a PhD in Information Communications Technology with a focus on technology adoption. His research interests cover technology adoption, mobile payment systems, ICT networks, and security and online learning. Welcome, Dr. William. Next, I'm pleased to introduce Omoneka Oyer. Omoneka is the operations officer in the IFC's Financial Institutions Group, covering digital transformation and digital payments. She has a background in strategy consulting and economics and 15 years of experience advising financial institutions, payments providers, and policymakers on the deployment of digital financial services for financial inclusion throughout Africa. She also leads IFC's digital transformation capacity building program called DigiLab in the Middle East and Africa. She holds a master's in international relations and international economics from Johns Hopkins University. Welcome. And then finally, Dr. Shintin Tiffany Sai, assistant professor in the Department of Economics at National University of Singapore. Dr. Sai obtained a PhD in economics from UC Berkeley in 2019. And her research areas are industrial organization and digital economy, focusing on market infrastructure, market structure, pricing, and fintech. So welcome, Tiffany. Great, so let's get right into the discussion. And I think, Omeneka, I'm gonna start with you, if that's okay. So tell us a little bit about how you are an IFC thinking about instant payments. And in particular, if we're thinking about the theory of change that Russell outlined in his presentation, what kinds of impacts on financial inclusion do we expect to see? And are you seeing these impacts play out anywhere in any of the markets that you're working in?
Okay, thank you. And first of all, hello to everyone, and thank you for having me. So you asked me a twofold question. The first is really around how IFC is thinking about instant payments. And in order to answer that, I think we should consider the role also of our broader World Bank group. So the IFC is part of the World Bank group, and we focus particularly on the private sector. But there's a lot of work that's being done by our World Bank group colleagues on fast payments, instant payments, and how these can be effectively deployed in different countries through the public sector, so through regulators. And we do work in a complementary fashion. So the World Bank focuses on the regulator and the regulator's role and how that might support the development of these instant payment systems on the technical side, in terms of governance. We focus more deeply on the governance at an industry level. So how does the industry organize itself? Who should be participating? What rights or roles or responsibilities do they have? As well as the business model. So while we may not advise on a specific pricing, but we can share best practice or examples from different regions that inform the development of the business model. So that's how we work in a complementary fashion, with the World Bank focusing more on the regulator and us focusing more on industry. And in terms of the impact on financial inclusion, I think that the results are mixed. And definitely, I think this is where your research comes in. This is a big gap in terms of the literature or what we're able to learn about the impact on financial inclusion. If you look at a country like Nigeria, for instance, where, in terms of other metrics, for instance, volume of transactions as a percentage of GDP or per capita, you might think that this is a success story. But when you look at the financial inclusion numbers over time, since we started collecting that data, so from 2011 to now, it hasn't moved much. And in fact, at some points it decreased. Similarly, in India, where you have, a really high penetration of UPI, we've seen between 2017 and the latest global Fintechs figures, there's been a slight decline in financial inclusion. So, I think we still don't know. We would like it to increase financial inclusion, definitely. And I think that's an explicit objective of every single instant payment system that I've come across, is that it's written somewhere that it should foster financial access and inclusion. But are we measuring that? Are we ensuring that we're putting in place the right mechanisms to ensure that financial inclusion is taking place? I'm not sure. So that's definitely something that a lot more work is required on.
Thank you so much. I guess it's a hard question to answer, but do you have any ideas about why you're seeing negative growth in financial inclusion in some of these markets where this has been deployed, or any guesses?
Well, this would be just my hypothesis. I don't claim to speak for the whole of IFC on this, but if you look at the global Fintechs data, those people that are likely to transact are people who have received money into their account, whether it's a mobile wallet or a bank account. So they receive money from government, they receive money from an employer, they receive money from somewhere. And then they go and use that money elsewhere. So even just having an account is not enough. There has to be some flows into that account. And I know it sounds very basic, but that's what the data is telling us. And so if we have a situation where for instance, during COVID-19, people are not necessarily receiving money into their account. Is there a way that the government can step in and do social transfers? Or, we were currently working on a project in Tunisia, for instance, where the government did exactly that. They digitized social transfers. Now they're trying to digitize any form of government payment, paying, temporary municipal workers, or paying scholarships into student accounts, so that people have money in their bank account or their digital wallets, and they're then incentivized to go and spend it. So it seems very simple, but I think that that's one way that we can incentivize greater usage. It's not enough to just have the account. There has to be something coming in, and the government can play a role if the private sector at the moment is falling short on that front.
Right. Yeah, shifting gears a little bit, let's think about the case of Tanzania in particular. And William, I'll go over to you. So, as I'm sure everybody here knows, Bank of Tanzania is currently implementing a project to build an interoperable payment system, Tanzania Instant Payment System, or TIPS. So tell us a little bit about that experience. What have been the main challenges that you've faced in launching the system? And I guess what are some early successes that you've seen so far? I don't want to just focus on challenges, but would love to hear more about what that experience has been like and where you see the adoption of interoperable payments and more broadly financial inclusion going as a result.
Thank you so much, Rebecca. Actually, I'm honored to be in this panelist. For the Bank of Tanzania, at first, we saw there's a great gap in interoperability amongst the financial services provider. So most of the financial services providers were doing bilateral agreements so that to make sure that they can transact with each other, so that the customers from one financial service provider to get services from the other side, there should be like bilateral arrangements. So we see that was one of the very big challenge. And also there was no standardized platform that could save for the entire market. So those was one of the key drivers that made the Bank of Tanzania to go for TIPS. Another thing was also unhealthy competition among the financial services providers. As you know, that in Tanzania we have several financial service providers, especially for those who offer digital services using mobile monies, and some of them are the big companies and some are the small companies. So there was a lot of misunderstanding and a lot of enhanced competition, and also barrier to entry for the smaller providers. With this, that was also another challenge that I've had to go for TIPS. Apart from that, we lack a central operator. As most of we had like the RTGs for the high value payments. We have like a centralized system for the high value payments, but for these systems, we did not have a switch. We had only one private switch, which is the Mongose switch, but it's mostly dealing with the small banks, for the small banks and the small financial providers. But for the bigger companies, they didn't do that switch. So
could I interrupt just a moment? Do you mind moving the microphone closer to your mouth? I think the last point was a bit lost.
Oh, sorry. Can you hear me now?
No, try again, or I don't know if there's a way to make it louder.
Can you hear me now?
Yes, that's much better. Yeah, I think the last point that you made was lost, if you don't mind repeating it.
Yes, actually, the last thing that I was telling it was about the independent switch operator. As in Tanzania, initially, we had only one independent switch operator, which we call Umoja switch. And that one was mainly dealing with the payment cards, and also it was like connecting the smaller banks and smaller financial services provider. So for the bigger and giants, they didn't want to join that. So we see it's also another challenge that we think we have to intervene as the Bank of Tanzania. Apart from that, we also see the issues of the charges and in providing interoperable services. was also a bit difficult for this financial services provider to agree in each year, because they had to make some like arrangements, agreements among the two FSPs. And so it was a bit bringing a lot of conflicts among the financial services providers. So in overcoming that challenge, so that is why Bank of Tanzania, we decided to come up with TIPS, which is like a central platform connecting every financial services providers, and all of them will have equal access to them. And being TIPS in place since it went live, we have seen that there's a lot of advantages. Like now it is easy for the banks and the providers using mobile financial services to interact. And also we have started, despite we are in pilot, we have run with pilot FSPs. Now we are onboarding some other FSPs. We have still learning and see and convincing some of the remaining to continue joining. So it's a gradual process because we have a lot of financial services providers here, and also we don't want to disturb the industry. So we are moving it into phases in onboarding. Yeah.
What has been maybe the biggest lesson that you've learned from these pilots so far? Either about the implementation or the market?
Yeah, actually, there's like two issues that we learned. At first, it's the preparation, because joining to the platform, it requires like developing and prepared. So for most of the financial service providers, they depend on vendors. They depend on vendors to do the development. So for those who have their internal capacity for doing development, they are more quicker in joining the platform compared to those who depend on vendors. And another thing also is like to do testing thoroughly. That is very key. Yeah, because we see if you do the system integration tests very clearly and everything, joining the platform, it's become very easy. But so if you don't do it properly, there are some hiccups which comes on when the FSP already joined the platform.
No, thank you. That's really interesting. And I want to turn to Steve. I think you're familiar with the TIPS deployment and have an amazing bird's eye view of a lot of different markets and a lot of different systems. So I'd love to get your thoughts also on, what's Mojaloop's Foundation's approach to fostering these systems? What elements do you think are critical for their success? And then I'd love, if you want to weigh in on the financial inclusion question as well, what's happening with that theory of change? Are you seeing this play out in practice anywhere?
Okay, happy to. So I would say that at the Mojaloop Foundation, we definitely obviously believe that inclusive instant payments are going to drive financial inclusion. And the part of that we're focused on is largely the cost aspect. We believe in this idea of zero fees. We want that. We think that's going to drive financial inclusion. However, it is a valid point by a lot of the participants that, wait, this is a cost for us. This is a high cost for us. And so how can you be telling me I have to give it away for free? So our goal is to bring those costs as far down as possible and take away that excuse from the financial service providers that this is costing me too much to give it away for free. And so we look at the cost for all of the stakeholders. So first and foremost, we offer, the main Mojaloop piece is the switch. And so a locally owned, locally operated open source switch, we think will lower the costs for implementation of having, and lower the cost for changes, et cetera. So we want to lower the cost for the implementation for a hub operator. It's a vision and it's a journey that we're on. I understand we're not there yet. But the other thing is the ongoing operational costs. Most switches were built for, so a lot of people trying to build an IIPS are using a lot of technology and a lot of operational processes that were built for $100 transactions, and they're forcing them into sub $1 transactions. And that's fundamentally wrong. We have to start from the idea of how do you build operations in a way that that is going to be tailored to sub $1 transactions, not if you really want to do a sub $1 transaction, then that's fine. So both the implementation and the ongoing costs of the operator, we're trying to bring down. And there's a myriad of ways that we're trying to do that for the scheme owner and the hub operator. The other thing is that the FSPs are correct. It's a challenge to implement real-time payments. And not just for the microfinance institutions that we really want to get included, but also even mobile money providers and even most banks and markets that we look at, a lot of them don't have even real-time ledgers that are running 24/7. So how do you participate in a 24/7 real-time payment system if you don't have a 24/7 real-time core banking system? And so we've actually built a lot of tools that allow them to participate at a much lower cost as well. And again, we're trying to knock off these costs one at a time as we come across them. And so that's one of the other things that we're doing. The other area is on things like merchant acquisition. And we think that fintechs are able to do that at a much lower cost. A lot of technology companies have learned about consumer and merchant acquisition with a very different business model or a very different model than banks do. And banks have a great business model, but it doesn't necessarily drive for mass scale the way that technology companies do. And so we want to make sure that technology companies and fintechs are equal participants at the hub level for PISPs. And it's, if you look at what we have here in India with UPI, it's a lot of great success stories, but largely driven by the PISP stories of GPay, PhonePe, and Paytm. And they were the ones that were out there driving merchant acquisition. And so I'm sure I'll talk about that a lot today, but we want to make sure that they are included at the scheme level. And so we've built tools that allow that to happen. And so that's really what we're focused on, is costs for the all kinds of costs for the hub operator, the scheme owner, as well as the participants to come down, so that then they actually can offer it as a price of zero or very close to zero for the consumers, if they want to. But what we don't want is that a scheme that decides, I do want to offer it for zero, but I can't afford to because my vendor is charging, and this is how much it costs me to keep the system running. We don't want anyone to have to make that decision. If they still want to charge a fee, that's fine. But we'd like to have the optionality. And so why I think it will drive financial inclusion, I think the Fintechs comment is very important, and it depends on what we measure, which is why what IPA is doing is so important, is deciding now, what are we going to measure? And in my opinion, I mean, so like in my dream world of microfinance clients being able to transact and send me money in the United States to a bank, because there is one global financial system that even microfinance institutions and village savings and loan associations are connected to, those people wouldn't be newly financially included. They're just getting much better service out of their existing account. And so I think it's important that we're measuring not just the number of people that are included, but how they're using those accounts and what they're using them for. And so not just quantity, but quality. And I think there is a lot of quality measurements in Index. That's great. But I think that it's great for IPA to look now at, if we look at that future world of an inclusive IPS enabled world, what does quality look like? And I think it's going to be very different than what we're currently measuring. And so that's what I'd like to see us try to do. And then, and I also think none of the IPSs that are out there, I don't believe are at the kind of scale to kind of see what happens when we get to that next effect. And I think we're still about a year or two away from that. So your timing is great with this project to track those over the next couple of years. But I think we are going to see UPI and Rust and InstaPay with some of their new innovations really start to show something different. And so I'm excited to see what you guys discover.
Yeah, thank you for those comments and the terrific segue to my question for Tiffany. So Tiffany is one of the principal investigators on this project, obviously. Tiffany, tell us a little bit about the approaches that you and your co-authors are taking to build evidence on these questions. What projects are coming down the line, and how are you thinking about data usage?
So thanks for having me, right? So we started this project like 2 or 3 years ago, and we were like amazed by this topic. It's very exciting, but we were surprised like there are not so many empirical research out there and actually try to identify this, the effect of interoperability. And there's also many reports out there from policymakers or regulators, but I think based on our conversation with regulator, we feel like having kind of a rigorous quantitative evidence will be very important for them to decide, what policy to implement. But however, we also kind of, it's a bit hard for us to, causally identify the effect, because interoperability is a system level changes. And normally, if we want to identify an effect in a causal way, we need a control group, right? But basically, if this is a system level changes, it's very hard for us to find a control group. So all the effect we identify might be correlated with other things that might happening, especially during COVID, there are so many things changes, right? So this make identification very hard, right? So the approach we take will be a bit more, relies on a bit more modeling. So in econ, we have an approach called structural modeling, which means that we can write down an econ model, predict what consumers will do, what merchants might do, and what the FFC the behavior. And then we can use random RCT to identify the parameters in the model, which help us to simulate what will happen in some of the counterfactual that we are interested. So including kind of different timing of interoperability, different pricing, or different kind of environment, right? And then in terms of data sharing, I think because it's empirical research, so data sharing will be definitely kind of important. But when we're trying to think about whether they are available data in public, it's actually very limited. And also kind of, it might only available on the nationally aggregated level, right? But I think in order to kind of explore more variation and get more stronger identification, it will be very useful to have, like breaking down by province level or city level and so on, right? So I think like in terms of, facilitating this discussion, even with regulator, I think more data sharing from the partner or from the government will be very important and valuable for researchers and also like the society, right? And finally, I just want to point out, I think the empirical framework we develop will be very useful for the interoperability payment system, but it can also be useful for other kind of type of system interoperability or any system level changes that it's harder to find a control group.
Okay, thank you. Maybe I'll ask Dr. William, who's joining us from the point of view of government. So I guess, how are you thinking about conducting research on these systems, and what Tiffany said about data sharing and working with researchers to be able to track some of these outcomes? Is that something that you're thinking about? What would the government's approach to this be?
Yeah, actually, it is very necessary for the government to promote data sharing. And also it is very key because as you understand, in the area of payment systems, whatever decision, and in order to manage the issues of cost, to know the issues of customer protection, all the issues, data protection is very key. And another thing is also the issue of data protection and data sharing. It increases trust to users of payment systems. My perspective, most of the decision makers, policy developers should consider a lot on this area of data protection and data sharing. Yes.
Yeah, no, that's definitely a key piece of this. So I'm going to move. I think we have maybe 10 minutes to the hour, and hopefully the panelists can stay on a little bit if there's additional questions. One of the questions coming in from the audience that I'll direct to everybody is, aside from some of the barriers to adoption that the panelists have mentioned already, is digital literacy a concern? And how can providers work on digital literacy? I don't know if there's anybody who would like to respond to that question. Oh, I think you're on mute. Oh, we're still not able to hear you somehow. Okay, we'll come back to you maybe. See, I don't know, Steve or William, if you want to, Steve, do you have any experience or insights on that?
I'll quickly, you mentioned WinePay earlier, and I know that WinePay has a side program that we've started, that they've started, I'm not there anymore, that is working with 2 local providers to do financial literacy, but financial capacity building, where they are actually they're building programs not to train people about financial literacy like numeracy and calculations, et cetera, but actually specifically, this is how you open an account. This is how you do a transaction on our payment system, as a way of, and then giving them a call to action with a button. And all the training is done through things like WhatsApp and Viber. And that allows them to actually have calls to action to say, click this to open an account, and then takes them step by step how to do a transaction. And that way they get practical experience. So that's our view on financial literacy. And I think I've also mentioned the PISP and the Fintech. Folks like Google have a great way of making it so that you don't need any training. Like, they design things quite well. And I think that's what we're seeing, as well as Fintechs tend to make their apps a lot easier for people to use. They're more user-friendly for not 100%, but frankly, better than most of our bank apps.
No, we can't hear you still. I don't know if, hopefully that's not on my end.
Yeah, maybe I can add up to what Steve was said. Actually, for the case of literacy, it's very key, especially even in the designing of the payments platforms. It is very key for the designers to consider that the apps which are easy to use and include almost all the instruction that for which the customer can just simple follow the instruction and do the transaction. Apart from that, most of they have like these literacy programs, and also like public awareness sessions to describe their platforms, and also to have like some workshops to share how the platforms are doing and what is included, what the features that customer can benefit from, and any other advantage. So it is very key for the PSP themselves to offer their awareness session, as well as the designers of the platforms, the Fintechs.
Thanks. Moneka, do you want to try again and see if your mic is working so you can make a comment?
Okay, one last time. Is it better now?
Yeah, we can hear you. So
Okay.
digital literacy.
I'm sorry about that. Yeah, no, I just wanted to echo what Steve said. I think that the provider doesn't have to be financial, but the provider is best placed to drive that digital literacy, and it, you know, it really works when you're just showing them how to do the specific transaction that they want to do. You know, how do I send money to this person? How do I pay for this good? And you know, I agree that people intuitively pick this up, but already mobile money operators are very good at doing this. Fintechs do this very well. So I wouldn't say that that's too much of a concern. It's true that a lot of people struggle to use mobile phones or to use payment solutions, but once you show them what to do and the steps to take, then it's a one-time thing, and then they move on.
Thanks. So we have another question from the audience, and this is, I guess, specific to the experience of Tanzania. So in terms of stability of the central operability payment system, how is the risk of disrupting all the payments in the country being mitigated when the central switch goes down?
Thank you for the question. Actually, what we have done in the design of the central switch, we have definitely tried to maximize the redundancy. We have done a lot covered a lot in the area of redundancy. We have managed to consider to have the system in several data centers, and also to have the application located in multiple locations. So we expect this one, it is very, the possibility of the central switch to go down is maximum, very minimized. But in another thing, apart from that, also, we have other means of payment. Like if the central switch go down, still there is also the RTGS with the normal system is doing. We have the EFT, we have Apart from that, we have the check payments and we have the card payments. All of them are still working, even if the central switch for the mobile payments goes down. So we have a lot of alternative, and still customers can do and use other channels apart from those which are using the central switch.
Okay, thanks. Another question that I'll open up for the whole group, and Russell, feel free to jump in also if there's anything you want to add to these questions. What is needed to ensure that these payment systems support fintechs and newer players? Oh, Monica, I saw you smile. I'm going to put you on the spot.
Yeah, yeah. No, I think that there should be. It doesn't have to be a specific regulation, but at least an expectation from the regulator that this is, going to be open. That is in the case where it's an industry-led sort of initiative, where the regulator is the one who's put it in place, and many IPSs are like that. Then obviously that's it's up to their discretion. But I think also lowering the bar to entry for smaller players that may not have teams of developers in-house, or may not necessarily have the right authentication tools or mechanisms in play, or may not have access to a whole host of data centers. So, making sure that those kinds of things are centralized, and therefore it lowers the barriers to entry for those small fintechs. Large tech companies can do that. Large banks can handle those kinds of costs, but things around fraud management and control and monitoring and observation and security controls and all those kinds of things, if they can be centralized, then it really makes it a lot easier. It's something that the fintech doesn't have to take on board. And I think the second thing is around the business model. So making sure that even if at the end of the day we want it to be free for the customer, whatever is decided by the switch, that at the back end, the other aspects, such as the processing fees, such as interparty pricing, makes sense for these smaller participants as well. So it all balances out, because if they're not seeing, the necessarily returns from being a part of this, then they're either going to pull out or they're not going to encourage customers to use it. So I think that that's something that's often overlooked. We want it to be free for the customer. That's great, but let's also go back and make sure that the costs, the other side of the equation, make sense for all participants, not just the big ones.
Yeah, thanks. And I'm sure there's so much more that we could say about all of these questions. I'm just taking a look at the clock. One last question for Tiffany, and then we're going to move to wrap up. Tiffany, where can we get more information about the methodology that you spoke about and any preliminary results when they're available?
Right. So I actually just answered the questions, but yeah, I can answer here again. I think because we are running in the process of rolling out our RCTs, right? So we unfortunately haven't, have a preliminary result to share, but we hopefully we can share that, in the near future. Yeah, and then the finalized kind of model version will also need to change based on the result of the experiment, right? So so unfortunately, right now we haven't settled down a model yet. Yeah, but there are some papers that we cited in the white paper, like which we heavily based on these papers, existing modeling for our research.
Great, thanks for that. And like I said, there's so much more that we could go into, and a couple of other questions on here that are still open. So do feel free to reach out to IPA, to our contacts, and we can share any remaining questions with the panelists and put you in touch with anybody that you want to speak to follow up on the webinar. So with that, I will turn it over to Phil to wrap up. And thank you everyone again for the discussion. I wish we had more time and we're able to get more in depth in a lot of these topics. But again, I think that we're just scratching the surface. So I'm looking forward to continuing this work, obviously, with IPA, and hope to bring you guys on board to give us feedback on some of the results that we hope to get. Thank you very much. And Phil, over to you.
Okay, great. Yeah, thank you very much, Rebecca. And thanks so much to our panelists for fascinating discussion and taking the time to join us amongst your very busy schedules. And thanks to all the attendees for joining us. We hope you engage with the white paper. Look forward to continuing the conversation. And thanks for staying to the bitter end here on our webinar. I would like to close the webinar by just making 4 quick points that were highlighted in the panel discussion and Russell's excellent presentation, and that represent, I think, and our team thinks, are important research priorities going forward. So one is financial inclusion, right? So there was a lot of really interesting discussion about, how inclusive, how instant payment systems can, be inclusive, right? Omonika made this fascinating important point that we can't necessarily equate rising transaction volumes with financial inclusion. And Steve emphasized that, maybe one way that interoperable instant payment systems can drive financial inclusion will be by lowering costs. But the key metric here is going to be whether this is deepening financial inclusion. And I think it's important to think not just about consumers, especially low income consumers who are quite dependent on small value transactions, but also smaller financial service providers. Are they being integrated to interoperable switches? So across all of our research streams, we are fundamentally interested in this question. Are interoperable instant payment systems living up to their inclusive aspiration? Who are riding the rails of these new payment systems? How are they using it? And who is being left behind? And what are the consequences? How we can bring them on board. Second point is on competition and innovation. Right. So Dr. William emphasized that one of the motivations for the Bank of Tanzania to launch the Tanzania Instant Payment System is to reduce barriers to entry to smaller FSPs. So that is an important question we cover in depth, thinking about how these interoperable payment systems can open the doors to new fintechs, smaller financial service providers, and level the playing field, so to speak. So we would expect that with a more level playing field, we would have greater competition, and with greater competition, opportunities for innovation. So we are studying this, looking at India and the launch of India's UPI system. And here, with the launch of Unified Payments Interface, UPI, we have seen kind of an explosion of new digital payment operators kind of riding on the rails of UPI to enter this space. And by one count, since 2016, there's some 65 apps that have over 10,000 transactions through UPI, right? So this, it might point to the benefits of interoperable payment system opening competition. Yet at the same time, 95% of the volume of transactions are dominated by kind of the big three players there. So we're going to be looking exactly at this point. What is the impact of UPI on competition, innovation? And then 2 last points here, and one is on pricing, right? So pricing is going to be key to any payment system. And Steve, mentioned this is one of the goals at Mongose to think about how to drive down prices. Even for low value transactions, which again were linked to financial inclusion. So we are very much interested in bringing rigorous evidence to the question of pricing. What is optimal pricing for off-net transactions? And to study this, we are working in Philippines with a leading FSP to directly test this question by randomizing variation in the fee for sending off-net transfers. So this will allow us to identify the elasticity of demand for off-net payments to help inform policymakers on optimal pricing. And this will be one of the first studies of its kind that can estimate the demand curve for off-net payments using experimental variation. So that'll be in Philippines. And then our last two, the last point is on payments and thinking about how interoperable payment systems can scale digital payments. Russell talked about this in his talk, that cash is king in many emerging economies, despite the takeoff of mobile money for person-to-person remittances. How can we fuel digitization of economies by ensuring that this trend crosses over to retail payment sectors? But there's been a lot of progress, but there's also a lot of room to go. So Steve mentioned the value of interoperable payment systems in lowering the cost of merchant acquisition. So that's one way interoperable payment systems can drive digital payments. We're very much interested in this, but also thinking about beyond supply side factors, also demand side factors, right? Is there demand for digital payments, beyond using cash? And we go in depth in the white paper on this issue, and we think about payments as a coordination problem. And Russell very much alluded to this. And we have to think about, are not just merchants acquiring digital payments, but are also consumers acquiring and using digital payments. If we don't have both of these actors working, joining concurrently, engaging, using digital payments concurrently, we might fall back into that cash equilibrium, like we see. Because a merchant, even though it might be easier to acquire digital payments, if they don't see consumers using digital platforms, instead using cash, they might revert back to cash. So in Tanzania, we are studying this, looking at an innovative referral system. So referrals have been widely used in payments, but often looking at same-side referrals, consumers referring other consumers. In Tanzania, we're interested in cross-sided referrals, merchants referring consumers, giving them an incentive to use digital payments, and likewise consumers referring some of their favorite merchants. Maybe that innovative system will help to bring merchants and consumers together using digital payments. In Pakistan, we're also interested in digital payments, but here we're very much interested on QR code technology and whether that technology can help to facilitate broader uptake, and what are some of the barriers to new technology being more widely adopted. So these are some of the key priorities. Are interoperable payment systems deepening financial inclusion? How are they fostering competition and innovation? What are optimal prices for off-net transactions? How can we scale digital payments? What are different interventions that can help? But also, what is the impact of an interoperable payment system as a whole? And we'll be studying this across India, Philippines, Pakistan, and Tanzania. And also interested in other markets. So that's kind of the direction we are headed, building from this white paper. So stay tuned for future webinars and presentations that will be reporting out what we are finding along the way. And we very much look forward to engaging with you and other stakeholders in this very important research and policy area. So thanks again, everyone, for attending, and we look forward to keeping the conversation going. Thank you.